Let's bring in RBC Global Asset Management Chief Economist Eric Lascelles. And Eric, I want to pivot back to the shutdown conversation for just a moment. This is some breaking news that just really happened in the last 20 minutes with Senator Schumer on the Senate floor, new proposal. When it came to the shutdown, you had already said markets were looking past it, but there is an economic piece to this I want to ask you about, and that is GDP for the fourth quarter. When you're at 38 days of a shutdown and you've already got billions in losses to the travel industry and ancillary industries as well, don't you think there is some concern now that we're going to see a little bit of a hit to GDP for Q4?
Well, certainly, I think we are going to see some hit to that. And so this is record length. It's obviously a more intense shutdown than the 2019 edition, just in terms of the budget categories included. And so we would assume that fourth quarter GDP grows by a percentage point or two less quickly than normal, just because of the short-term effects of this shutdown. And you're quite right to flag the airline industry in particular as being seemingly the most affected. And so there is some real damage there. Obviously, it's temporary, and you stand to get that back almost as soon as the shutdown is over. And without really having any particular political expertise on whether this latest proposal will pass, it does seem reasonably likely to me, as we see these pressure points build and air traffic being the most obvious, but one of only a few, I do think we'll see a resolution fairly soon. And so there is some upfront pain. There is the opportunity, though, for a spending catch-up later as a lot of these workers get those paychecks and are able to deploy money that they've been sitting back on.
Well, look, we're still not getting economic data. We would have had a jobs report today. We do not. We got ADP. We obviously got a very bearish forecast and a very negative forecast from Challenger Gray and Christmas when it came to layoff announcement, private sector layoff announcement. So between all of the, and even the state level claims that we can at least take a look at, between all of that, at this point, I want to get your take on the Fed, because the labor market had been their biggest concern. It likely still is. We're now at a 72% chance we're going to get that December cut. That is actually scaled back from earlier estimates.
I think there's enough softness that Fed cut probably is the reasonable default assumption for December at this point. But of course, the twist is that there is so little population growth, because there is much less immigration, that a normal month of job creation just isn't what we're used to. So we can't be framing this as we didn't get a 200,000 job increase, therefore this is bad. A normal month right now might only be 30 to 50,000 jobs. And so the ADP was actually sort of right in that ballpark. The Revelio was short of that. We're getting kind of mixed readings here. I think on the net, you would say that the job numbers are coming in a bit soft. Unemployment likely would have been increasing slightly. And so I think that does square up for that rate cut. But ultimately, we are, as economists, left a little bit in the dark here and a bit of guessing. And indeed, as consumer confidence numbers suggested, which are down so sharply, I think everyone is feeling rather uncertain right now.
Yeah, well, investors need data, and we have to run. But, you know, I was looking at consumer sentiment, and it fell across all age income party lines, University of Michigan. So that tells you that the effects of this, whether it's the shutdown or just the pressures of the AI trade and job losses there, Americans are saying they're feeling it. And I think Washington's listening this afternoon. Eric Lascelles, it's great to see you.